Think cash is safe? Think again. While you're sleeping soundly, your dollars are quietly losing value. That's right. What seems like stability is actually the slow bleed of currency depreciation. See, when assets like gold and stock rise, it's not always because it's becoming more valuable. It's often because the currency they're priced in is weakening. So sure, holding cash might save you from market swings today, but when it's time to retire, don't expect it to stretch that far. Even treasury bills, but still a losing bet long term. See, inflation doesn't sleep. And neither should you. In this currency crisis we're experiencing now, no one's coming to save you. So what's your plan? By holding a lot of these? Or are you going to hedge for your future? Let's talk about this. Thanks for checking in with me. My name is Mike, the host. And my job with these short videos is basically to keep you informed, up to date, and hopefully one step ahead. And so in today's video, we're going to talk a lot about the illusion of price valuation in this current day and age, given the fact that we're experiencing what I would consider a currency crisis because the Federal Reserve note, aka the dollar, is underperforming severely when you use other metrics such as gold. So today I'm going to answer three questions that I think you need to really pay attention to. And the first one is how currency devaluation impacts your savings. And second, why gold rises as cash loses value. And then the last and most important one is inflation's hidden threat, something people don't talk about a lot, on how your dollars are actually shrinking or the Federal Reserve note is actually losing purchasing power. So if you find this type of information to be timely as well as informative, I want to encourage you to make sure you hit the subscribe button so you'll always be notified. And the most important is feedback from you guys. So feel free to leave a comment down below so that I know that what I'm saying is actually hitting home. Ultimately, when we talk about assets like gold rising steadily, or even the stock market surging like it has over the last couple of months, one thing is clear: our currency is losing value. That's right. What you're witnessing isn't necessarily the asset themselves becoming more valuable, but the currency they're priced in actually weakening. Here, take a look at gold. Over the last 1 year, the value of this 1 ounce of natural metal has increased significantly from about $1,800 in October 23 to, as of right now, $2,500. And as an investor looking at this graph, it can appear to be exciting because you're seeing upward momentum. But if you zoom out to say 5 years, going back to November of 2019, an ounce of gold was $1,400. And then of course you look today, that's a continual upward trend of momentum priced in USD. But here, if you look at the actual purchasing power of that same dollar I'm referring to over the last year, the same time gold has been trending upward, here we see the actual purchasing power of the currency itself trending downward. So it's not that gold has actually performed well, it's just that the currency that we measure it in has been underperforming. And if I zoom out to about 2019, we can see an even steeper downward trajectory of our US dollar, of the Federal Reserve note. Now, one thing is true, people love cash for one big reason: it's safe. No volatility, no wild price swings, and everybody knows that a dollar today will still be a dollar tomorrow. But what you might not realize is that while your cash seems to be stable on the surface, it's slowly deteriorating. So year after year, inflation chips away at the buying power of that unit. And this is why holding on to cash long term, or even conservative investments like treasury bills, which is government debt, is almost a surefire way to lose out. See, over time, everything else will likely outperform cash simply because of inflation. Even if you're incredibly risk-averse, you might stockpile cash. You won't lose any sleep watching the stock market swing wildly, but when it's time to retire, don't expect the cash to buy what it used to. So you'll sleep well, but you may not eat well. So the longer you hold on to cash, the more purchasing power you're giving up to inflation. And so the question is, what about the shiny metal that's been around for centuries? I'm referring to gold. Well, gold is more than just an investment. It's a hedge against currency debasement. So let's break it down with gold as an example. See, imagine you start with a daily gold price going back to 1971 when Nixon cut the gold standard off. You calculate the daily percentage change in gold prices and randomize these changes to create potential future outcomes. To run 1,000 simulations of this, you'll get 1,000 prices 1 year from today. And what do you think you'll learn from that? First, the most likely outcome is that gold's price will be higher next year than it is today. And you might ask why? Because over time, currencies devalue and gold tends to rise as a result. So based on historical data, so the probability of it being worth less is only 34%. But here's where it gets more interesting. The likelihood of gold being 25% higher, while the probability of losing 25% is a measly 2%. So in other words, gold is 10 times more likely to deliver significant gains than suffer major losses. So what does this mean for the risk-conscious investor? It tells you that holding gold isn't about striking it rich overnight. It's about weathering storms of inflation and currency devaluation. So while there will be bad days, weeks, or even months because of the manipulation that we're witnessing from the bullion banks, historically speaking, it has proven to be strength over time. So if you're in for the long haul, it's less about reacting to everyday market hiccups and more about keeping your eye on the long game. Now, you might think that past performance doesn't predict the future, especially how the global economy has changed. See, massive money printing, unprecedented government debt, and other post-2008 anomalies have led to a lot of distortions. But here's the kicker. When you run the same simulation using just the data from a few years ago, after the global financial crisis and post-pandemic craziness, the result still shows gold upward trajectory. In fact, the odds of making a profit have increased. So the probability of gold gaining 5% or so in the next year is a solid 79%. So what's the takeaway? Assets like gold and of course silver, which have held value for thousands of years, are your insurance against reckless monetary policy. Meanwhile, cash is a slow, steady loser in the world of inflation. Sure, government debt and other safe investments are less volatile, but they offer virtually no protection against the erosion of your purchasing power over time. So they might help you sleep at night today, but they won't help you live well in your retirement years. And even for stocks, the same principles apply. When currencies devalue, hard assets like stocks and commodities tend to do better simply because they are priced in a weakening currency. And so as the monetary base is expanded, that's more currencies in existence. It's going to show up in the actual USD price of whatever you're using to measure its worth at that moment it's going to be higher for sure. But then it doesn't mean that you're going to get as much value or be able to sell that and have reaped a lot of paper currency gains just because all the gains accumulated in that item has also shown up in the actual sticker price of goods and services. So it somewhat evens out over time. So at the end of the day, if you're sitting on a lot of cash hoping to play it safe, you're essentially gambling that inflation will remain somewhat tamed according to their figures, which is a bet that history shows is rarely a winner. And so there you have it. Just wanted to take a quick minute and show you the distortions in price and the valuation of real world items such as gold when you're using what I would consider a flawed measuring stick, which is actually the fiat currency game that's actually underperforming right now, as I just showed you in the graphs earlier on. And so once again, what you should take away from this is the fact that while the legacy system, the traditional financial advisors will tell you to buy these actual items, they're never going to talk about the actual damage that's being done to the currency itself, which kind of cancels all the so-called gains that a person will receive, because literally, unless it's 2, 5, 10, 20 times the return on that investment, you're not breaking even because you're not earning at a rate higher than inflation. And so with that being the case, holders of cash long-term is guaranteed to lose just because that's how the system operates. So once again, what should you do? Get physical. Redeem some of those paper notes for real money, i.e. gold and silver. And the best way to do that is to be intentional. After you've earned Federal Reserve notes, aka the dollars, you took care of your living, you put some aside for emergencies. Now, whatever you have left over, it's up to you to take that and do something worthwhile with that current purchasing power you have today. Because if you took that same $100 and put it under a mattress, come back next year, it's going to be $98. If you put it for 5 or so years, it's going to be $90. And you get where I'm going with this. So ultimately, take some of those notes, put it to use for you now, and it doesn't take much to begin protecting and preserving future purchasing power. I have a variety of ways in which I do that, but the most important and most crucial one, which is the easiest, it's a part of the silver team that I'm associated with. And so it's a system that allows people to actually take as little as 1 ounce of silver per month, auto ship it to where it comes to you directly. It allows you to passively accumulate silver without even having to think about it. And then if you want to build a business on top of it, by simply helping others, adding value to other people, you become a member and just share the information with other people. And in doing such, you'll earn fiat that you can then turn into more silver. And that's just a good opportunity for those who are interested. But if not, simply just go to your coin shops and just simply buy a couple ounces of whatever you can afford and park it. And that's better than the majority. Because mind you, 99.99% of people will not watch this type of video. And if they do watch it, they'll say, oh, it'll never happen to us in the US. But once again, if it happened in 99.99 of other fiat currencies, why would you not think it would happen in the Federal Reserve system, aka with the Federal Reserve note? So once again, just share my opinion. But if you're interested in finding out more, links in the description, or go to mysilverteam.com. You get all the information you need there. Reach out to me directly. I'd love to help out if I can. But once again, the goal is just to answer some very crucial questions that I'm sure you're going to have. If not today, you're going to have them next year. But anyway, curious to hear your thoughts. Drop a comment. If you found this valuable, hit that thumbs up button and subscribe, and I'll catch you guys later.